The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour on this, almost the end of the year as we get into it, December 15th. And of course, I am your host, as always, at the headquarters of Technical Trading and Investing, TFNN.com. And we're just going to see what kind of day we have out here. But as we start the show, we'd like to check in. But what are we off? 9.5 points on the S&P. Cash, 2.65 billion shares of volume. Really good for going into this week of expiration. Of course, we've got the FOMC meeting and some other stuff happening pretty quickly. So we'll keep an eye on it. And we even have movements in some of the stocks and indexes you wouldn't think were going on. But it looks to me like we're very close to some kind of bottom in crude, something like that. Mostly because I see the way that they're going after the natural gas market today, and maybe it's yet one more shakeout. But kind of hard for me to see that at least somebody didn't think this morning that they were looking for a bottom in gold, and we're going long crude and short natural gas. That is a fairly standard operation for a lot of these guys in that market. They always like to go pairs trades. That way, at least if they think, at least if crude goes up, then natural gas will go down, because more and more people will short it, and it's a self-fulfilling prophecy. But we'll see how that works. Anyway, as we look at that, we do have some final and decent movement. Apple is off another buck out here. We talked just how poorly that a lot of these people in the supply chain looked. You had a fairly decent earnings cycle on them, but Apple, I'm going to just say they for the most part, tested their highs on a lighter volume. But even last week, last couple of days, Thursdays and Fridays, as we got into the news that Apple was only ordering a fairly light amount of parts for the iWatch, we started to see more weakness come in to Apple. But a buck on Apple is kind of like $10 on everything else, because it drags the entire market down with it. Of course, we've got the IBB out and down 8 points, which is 2.5 points. Not a big deal, or 2.5%. Not a big deal per se. And I don't think anybody's going to basically retire on the move from whatever it was, 315 back down to 300. Did get as low as 296 today, so we'll see whether or not it can hold up. I've been out buying out of the money calls. My thought is that we're probably going to bounce on the FOMC meeting. I think a lot of people believe that they're going to change the text on that. I would suspect that with the problems, and especially the problems that we saw in the Shanghai index over the last week with the crash over there, and the severe weakness in crude over here, that they're probably going to wait one more cycle to do it. We're probably going to get a lot of a nice gap up, I think. And I'm still looking for a 2050, 2070 expiration for Friday. And I think it won't take a whole lot to get that, because we've got so much weakness in one individual sector, that being energy, that just any kind of change in that, just a bounce, only about 11% of stocks are actually energy stocks in the S&P 500, but they correlate to 33% of the actual movement, or 3 times what they do. So they are the canary in the coal mine. A nice bounce in that wouldn't be too hard to see 2050 on Friday. So keep an eye out on that. I think we're seeing at least the first people go after crude. And maybe this isn't the bottom just yet, but I think we're probably within a day or two of some kind of massive move in crude to the upside, just a bottoming short squeeze. Basically, everybody in the world is now short crude, and a lot of people on the wrong side of that. And as soon as they're done being forced out, probably going to have a violent reaction to the upside. So you're going to have to be a very, very quick on the draw. I think I've had 4 updates already today in the Tech Insider, trying to go out and grab a few of these positions, and yeah, I think I'm pretty happy with them so far. Only have one that I think that I'm probably going to miss out on, and doubling up on some of the other ones on what seems to be a fairly inexpensive play for most of these. I'm going to lose maybe 2 or 3% of my portfolio overall if we don't have a bounce, and I'm probably going to gain about 12 or 13% if I do. So that's the heart of any kind of asymmetrical trade. That is to have a small loss and a large win. And probably 50-50 chance on that, as most of all. I did buy one equity out here today, and I think that's kind of interesting. I am short a very long time frame. I think I talked about it on Friday, that we went out to April's for the Tech Insider because I started to see some weakness. I just think that there's probably a handful of stocks. I'm not talking about indexes. I'm talking about a handful of stocks that are so highly short that they can't even move down. Any kind of tick down finds somebody else trying to catch these. And when you look at these stocks with 15 days to cover, not a lot of those things, they're not really burrowing down or falling apart. Maybe they're off $1 today, or even less, maybe 50 cents, which is a good indication that if we do get a bounce, they're going to have a rout on those short positions between now and the end of the year. I'm hoping that's between now and Friday on some very inexpensive out-of-the-money calls. Now, I could be wrong, and I've been before, but I will lose a little bit, and I have a huge amount to win. As always, you can give me a phone call at 877-927-6648. You can post a message in the den, and I'll try to get to it. And, of course, you can actually email me at path@tfnn.com, and I'll try to answer your questions. I think we've got a couple of questions that I got over the weekend for the show, and we will take a look at that. One thing about doing a short squeeze, and that is that you're probably looking at, if you're going to try to play them along with me, is you're probably looking at stocks over $10. You're also looking at stocks that have fairly decent institutional ownership. You want to be able to know that there's at least a few funds out there that are going to want to buy them and or run the short squeeze. They'll probably sell into it once they run the stock up. But that's yet another good one. If you got somebody that probably has a good invested interest in running the stock price up, that's another good bonus. Just because there's a lot of short interest doesn't mean the stock will move. If you've got a fund that owns a lot of it that would like to sell it, they're going to try to move it up. And your job is to get out of that stock before they do, and try to figure out where they would like to park that thing for Friday's expiration. And don't be a pig. Get in there and sell just a little under. I've got one that I think I'm going to make about 300% on. Things hanging in there, not showing any real weakness out here. I think it's up 6 cents today on a pretty horrible day. But my guess is that certainly could go up about $3 and give me a $3 product on about an average 70-cent option. So I think we've got some interesting ways to make some decent money and keep the risk at a minimum. If I had been short I actually am short one long-term position. I think what we're going to get is some kind of short squeeze out of here, and then that sets up enough fear. People watching what's going on now that haven't sold are probably going to think about selling at the beginning of the year now that they've seen the weakness. So I'm basically setting up for a lot of short positions at the beginning of the year, and I'll try to find the weakest of the bunch. On Friday's show with Tom O'Brien, I talked a little bit about the generals starting to participate. And if you didn't catch that, it was basically an old thing from Joe Granville. Joe, if you don't know who he was a big market timer who was always bearish from day one. And because a stopped clock is right twice a day, so was Joe. He basically came out with a bunch of them. But I think early on he was, I don't know if he was on one of the PBS things. This is before CNBC was even around. And I think CNBC came around early 90s or something. But anyway, he basically was always bearish, and market fell apart after one of his bearish calls. And he became a rock star. Never really ever had a decent call. Went on to make absolutely huge amounts of money in the, was it 87 crash? I think so. And then proceeded to spend the next 15 years giving it away by being short forever. And, of course, I think he died last year. But he was one of these guys that was always perpetually short. But he did have a theory, and that is that on the start in a bull market, you had the generals, the big stocks, and they led the charge up the hill. But when it came time to go down the hill, he sent the cannon fodder down first. And basically, when they all pretty much bottomed, the generals would then start heading down the hill also. And we looked at a bunch of stocks on Friday, and I was looking at things like CCJ. Maybe I should pop that up right now. We have enough time? Yeah. CCJ. And it's kind of interesting to see just how light a volume that some of these stocks, especially in the commodities sector, and you wouldn't think Cameco selling uranium is really a commodity, but I didn't see a lot of volume down here, so don't see a lot of volume today either. And if I was hankering to go long me some uranium, not a bad-looking chart out here other than the fact that it came down with a little bit too much energy. But ever since this thing went below the October 16th low, $15.55, 2.9 million shares. Last 3 days we've had 1.8, 1.5, and 1 million so far today. Just gives me a good indication that I think that we're probably down at the lows or close to the lows on some of these energy stocks. On this day in 1972, a leading survey of stock market newsletters, Stock Service Digest, finds that 84% of well-known stock markets advisors are bullish. Only a few people, like Granville, that are always bears, were bears, but they always were, and are counseling on new buying. The Dow does not rise above today's level in 1972 until October 20th of 1982, a full almost 10 years later. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, take a quick look and see what we've got out here. 1996 on the S&P cash, off 6 points on the S&P cash, 2.77 billion shares. And I have to say that I like history because, of course, if you don't know history, then you're bound to repeat it. But I've done something off and on for probably 10 years. And this is the first time it failed. And I'm thinking it's an indication that our education system has failed. And that is because no one, I mean a bunch of people that should have gotten it. Anyway, I was out last night eating dinner with a bunch of PhDs. These guys are all either, and they're all real scientists, not me, who just knows and kind of interested in science. But anyway, there was about 16 of us, and we all were going back into the back room of a dinner place to eat. And, of course, I set up the deal, and we were talking a great deal about physics and trading the market, that kind of stuff. But I've always put our name underneath it as they always say, well, what's the name of your group here? And I said it's the Donner Party. And most people, when they call you to sit down, finally say, they say Donner Party, party of 18. At least some of the people get it. But I don't think too many people know what the Donner Party is anymore. But I have to say that no one knew it, and that hurt me. And the other thing is, I'm thinking whoever wrote the dictionary, they probably ought to change their definition of party, because I don't think that Donner thing had anything to do with a party, but it was known as the Donner Party. It wasn't like, even if they didn't have to start eating each other as cannibals, it was going to be a Sunday afternoon in the park. But at least at least a few people used to get it. Now, not even really intelligent, smart people get the whole Donner Party thing. No one knows our history. No one knows the wonderful adventures of cannibals in the 1880s, do they? Anyway, just a thought, just a random thought. And hang on just a second. I got to get something going on up here. There we go. So I got about 3 minutes left. I think that's about it. Of course, we got the budget deal done. Maybe that's put just a little bit of a floor underneath this market. Now we're at 2,000. Like I said, I suspect that it's going to be light volume probably in tomorrow, and we're going to see kind of a pop after the FOMC meeting. I'm not betting that they are changing anything until next month. I think we're probably going to just see too many things. Of course, our engineer wants to remind me, because I went on his radio show on Saturday. But everybody has their little nicknames in his radio show, and I went on the MC P-Pants. I was getting down with my homies. Anyway, he's all excited about that. Anyway, where do we go here? Anyway, someone brought this up. Kind of interesting. We're having some, Jeff liked to dance. We're having some indications that we probably are at some kind of exhaustion low. Somebody brought this up in the Den, LINE. Good example of a exhaustion move in a stock, and that is a huge move down and huge volume finally after a huge move around. Normally, if you double the volume or triple the volume when you're down, like if you look at Lynn out here, that doesn't mean that the stock isn't going out of business or anything else. What it does mean is that if you're thinking about being short this thing and covering, that this is your opportunity. I always say at the end of the show, sell when you can, not when you have to. It's the same thing when you're covering. I mean, this should be everything that someone wants to. If you want to let this thing go sideways for 2 weeks and maybe do a retracement, probably a good thing to just go ahead and take your money now. I can't imagine that a lot of these companies are going to go instantly bankrupt. They were a little higher, but it is a little tougher out here to think that everything is over immediately. If you've learned anything about watching Radio Shack and other companies like BlackBerry and Sears Holdings and all the other Walking Dead stocks out here, that you're going to occasionally get these huge moves down, and like anybody, you need a market, especially if you've got a huge line. You need a market you can cover in. Now, if you were some kind of giant operator in this stock and you had 1 million shares short, maybe this is the day that you decide to go in there and start buying 100 lots, and over a period of a week, maybe you get out of this thing. But just remember, there's going to be somebody that always has a lot of shares more short than you, and when you see these high volumes, it's almost always a clue that these guys are ready to get out.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're good out here. Got some more people talking in the den. Again, you can give me a call at 877-927-6648. No, Andy Heck has a bunch of new articles on Seeking Alpha. I'm sure he'll post those links in the den. Trying to get one out that we were going to call Dumb and Dumber, but I don't think they're going to allow him to call it that. He said he had to change the name, but that's a lot of these gold companies, I think, buying other gold companies. It's just stupid buying stupider, but kind of interesting. We'll see how that article. Also, the Cartel of Cards, which is something, at least I'm about half responsible for the titles, and Andy's responsible for the entire articles. I think I've got the easy lifting side. I pick up the light side of the couch if we're going up and down the stairs. But Andy's got a bunch of these. I like this other one, too, which is the Russian Paradox. Mao cheers while Lenin spins in his grave. Anyway, we kick around titles for his articles, but of course he writes them all and was responsible for them all. And if you're going to sue Andy, I had nothing to do with it. Just remember that. Anyway, bunch of articles on Seeking Alpha. I'm sure he'll put it in there. Anyway, another question in the den is what's going to happen to Petrobras? And rightly, he is all about, in the den, Peak, is talking about Jim Chanos. He's a pretty big guy guy when it comes to shorting stocks. Got Enron, got most of the housing stocks in 2008, and he's got a bunch of these stocks that have extremely dubious books. And of course, he's got time frames that are a year or 2 years down the line many times. I think he was short 130 or 140 or something on Enron. But he knew their books were a house of cards. And anyway, rightly did bring up that Mr. Chanos has pretty much thought that these things were bogus in the way of these state-sponsored oil companies. And I suspect that Petrobras has two things that's wrong with it. First of all, of course, is the price of crude coming down. Second of all is a government in turmoil. It's unclear, but I'm saying that there's probably a better than 50% chance that the current president or prime minister of Brazil ends up in the who's cow. Everybody and their dog was feeding at the teat of these companies going into the elections, the politicians. And it looks to me like there's not going to be a whole lot of change out here. Now, does that mean this thing has to go out of business? The answer is no. But I think they got a fairly high cost of production. They certainly had all those ships out there that were going to pump oil up off the seafloor. But I think the cost of production on that may be $60 or $70. So right now, probably not getting a lot of action. And, of course, the Saudis seeing that kind of stuff getting ready to come online, probably were more than happy to drop the hammer on these guys and not only forcing the Russians out with huge moves, basically destroying their oil economy and helping us out at the same time, and helping themselves out at the same time, but also killing off would-be competitors like Petrobras and Brazil that was going out there deep, 4 miles down, 3 miles down. Anyway, I think we were talking, maybe it was early, maybe 2012. I said, you know, all this capacity is going to come online and eventually move the prices of oil down. And that's back when I was being yelled at by a bunch of people who kept on echoing and yelling, peak oil, peak oil. The best thing for a high price in a commodity is a high price. Someone is going to figure out a way to get some more of that to the market, and boy, did they. Anyway, I'm going to look at some other stocks. In the meantime, you can always give me a call at 877-927-6648. That's 877-927-6648. Let's go to what's moving out here today. If I can actually get it here. We've got a lot of stocks moving, so let's take a quick look at these. The first one out here is Alliance Data Systems. Nice big move for a down day out here. Company provided an update on its private label management system for November 2014. Average receivables up 31% year over year to $10 billion. Delinquency rate fell to 4.1%. So a nice move out of this one on a down day. Even on a bad day, there's going to be stocks showing relatively good support and relatively good relative strength, and this is certainly one of them, so you want to keep an eye on this one. WFM, which is another one out here, talk a little bit about a takeover. Now, what I like about this one is that it's probably bogus takeover chatter, and for me, the thing I would be looking at is whether this thing goes up and up and up on light volume, and then we see this thing. It's got a nice gap out here. My guess is that that gap would come back and get filled. Probably a fairly low-risk trade out here. I don't think a lot of people are wanting to buy these super expensive grocery stores anytime soon. $43 down to $40, so you could probably figure $41.75 as a good target on this thing, and I think it'd make a good short, again, probably after the first of the year. But these stocks, not up on strong volume or anything, but holding high. But when I hear all this rumors and chatter, and I watch these stocks go up rather slightly, I'm always interested. We've been talking about Ford for a while and how problematic it was that crude was coming down when they were launching these Ford F-150s, a pickup truck that's going to cost about $3,000 more than all the other pickup trucks because, of course, it gets 2 or 3 more miles per gallon. Made a lot of sense at $3.50 gas. Doesn't make so much sense at $2.50. Even at $3, we went through on how it was going to take about 8 years to pay back the additional cash. And it's still problematic, just more so. But so many of these companies that need to be building fuel-efficient cars when gas prices are going up only seem to get them out at the top of the market. And maybe their fusions will hold them up. But seems to me kind of, 5 years ago probably would have been a good time to introduce aluminum. Not today. But certainly a great truck. But we'll see how these things hold up. If crude goes back up, probably the Ford F-150 is the biggest moneymaker. And maybe it will find a home in third world countries where crude and gasoline is a lot more expensive than the $2.45 or $2.50 at the pump that it is today, at least around here. More questions. All kinds of stuff. Russian stock market, 55% of the market cap of Apple. Does that make sense? On Apple, the answer is yes. The reason why is you're probably not going to see Apple fall off a cliff tomorrow. You certainly could see Russia in ruins tomorrow and all kinds of flames. Somebody actually wrote me probably 6 months or a year ago about Canadian companies. And I said, they said, well, I mean, look at the fundamentals on this tech stock in Canada. And, of course, the company I was involved with it was in Canada, too. And I said, yeah, but there's one problem. And that is that as soon as anybody gets successful, BlackBerry is a good example. The U.S. companies, especially those in San Francisco, will offer them big bucks to go down to San Francisco, and they'll jump ship and leave your company. There's a thing called, and it's actually called this, the Canuck discount. And tech companies in Canada sell for about a fourth of what the same company doing the same business does in the U.S., and that's exactly why. And if you had the opportunity, if you were a smart guy in Russia, you had a good tech company, would you not take 5 minutes and just fill out a form and leave the burning taco stand that is Russia tomorrow if you had the opportunity to do something? And that's the problem. Oligarchs in Russia, it's not that far back that you had the Bolshevik Revolution. Could you have the same thing in a country with nuclear weapons? The answer is yes, and that's why it's such a delicate line for world politics to push Putin to the breaking point. But nice chart out here on Apple. Pretty much washed everybody out. I think we're probably washed out for a while, or at least this week. I'm expecting Apple to probably end up on Friday at about 115. Let's take a quick look here and see what we've got now. 1995 on the S&P cash. Again, probably hang out here. I know a lot of people that believe in 250-day moving averages are seeing these averages hit, but it's not doing much for me. Almost 3 billion shares on the New York Consolidated Tape. Other questions in the den were what? Maybe we've gone through some of these already. See, I thought there was something in here about restaurants. Do I have it up here? Maybe I need to increase my font size so I can see it. Does it make sense? Any thoughts on Buffalo Wild Wing, Eat Cake, Panera, and CMG? Yeah, CMG looks to me like distribution at the highs, but my guess is that'll be the next 6 months of distribution at the highs. I don't think you have a whole lot. Buffalo Wild Wings, they are upping their prices again, and I think that's at the beginning of the year going into Super Bowl season. As I said, I go there normally on Tuesdays. Monday is is half-price chicken at the, Piggly Wiggly? What is that? Winn-Dixie. That's where it is. So I go on Mondays. I pick up chicken at lunch. On Tuesdays, it's Buffalo Wild Wings. And if I don't get out to lunch, then it's Taco Tuesday night at Tijuana Flats. And, of course, Wednesday, I've got the whole week pretty much Skyped out on where all the best places to eat are during the week. And if I'm going to eat at Buffalo Wild Wings, Tuesday's as good as any of them. But all these places kind of interesting. To me, I suspect that you'd want to look at Buffalo Wild Wings short right after the Super Bowl. My guess is that this thing probably going to be hitting a high around Super Bowl time, probably hang out, maybe sell off a little bit into March Madness, and then you see the thing probably collapse. I just can't see them continuing to demand those kind of high prices for the food. The beer I don't have any problem with. I suspect that people really don't look at it, but are you going to pay more than a big, juicy 16-ounce steak dinner to eat at Buffalo Wild Wings? And their new prices are going to mean wings are that expensive. So I suspect that you're going to have a lot of people go in, probably have some sticker shock for Buffalo Wild Wings, probably have a good quarter. And right after that, March Madness is going to be, everybody's going to be mad at Buffalo Wild Wings that own stock in it. So I think... and Applebee's, yeah. I'm thinking that this thing probably is not a bad energy leg up here, nice gap up, but I think you've got trouble right there in River City coming out in soon. What else do we have? Okay, Oracle had a nice upgrade today. Now, they have earnings on either Thursday or Friday. I can't remember which one. So you've got to be keeping an eye on this one. Of course, normally, it's not uncommon to see a lot of people throw everything into the kitchen sink. And of course, we've got new co-CEOs in Oracle. A little doji out here. My guess is that you're probably going to see this thing sell off a little bit after earnings. That we had a big move basically on the new CEO who's a lot more cloud savvy. And by splitting up the company with two CEOs, you're going to have the part that's running fairly decently run by, I forget what the gal's name is, but she's pretty sharp. And then, of course, Mark Hurd, who's thought of highly by the old CEO to go really move this thing into overdrive for cloud services. And there's a lot of stuff that they have coming out here. But my guess is that you've got a weak first quarter in Oracle after earnings on Thursday. But big upgrade today, surprise, surprise, on this. And a well-defended stock. Regeneron Pharmaceuticals, REGN, is another one out here. What's the deal on this one? To see if I can find it here. Unfavorable mention Friday's Mad Money. So old Kramer pooped on Regeneron, REGN. When we look at this, certainly it looks like volume picked up, and you've got a nice gap out here at about 350. My guess is this thing's probably going to go sideways after today. This is a little bit of an exhaustion move. Look for this thing to hang out probably into the first of the year. If you could get a nice 50% retracement, maybe back up to 420, might look good at shorting that there. Anyway, we'll be back in just a few minutes. You can always give me a call at 877-927-6648, or you can email me at path@tfnn.com. Oh, we've got somebody that emailed me. We'll take care of that when we get back. I've got mail.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we had a question that in, how did I drop 40 pounds eating at Buffalo Wild Wings? That's because I only ate the chicken, no carbohydrates, Diet Cokes or Pepsis, no beer, and I pretty much go to places all over the place, barbecue places, anything I can eat. I go to there's a Brazilian Texas steakhouse on Saturdays and Sundays. They've got, I think it's about $60 at night, but it's $27 during the day. So I try to go there once a weekend. I try to find places that you basically have a huge amount of meat on the thing, and that was about it. So just didn't eat that. And for breakfast, I ate Atkins things and or made quiche or scrambled eggs or that kind of stuff. And you can eat as much as you want as long as you stay away from the white devil. Anything that's normally white, like flour or bread or anything, just the white devil out there will get you each time. The sauce has a little bit, not much. It's Cisco sauce, like everything, everywhere you go. No lap band, no operations. I stay away from those hospitals. That's where people die. Anyway, we had a...
You got mail, baby, yeah.
Yeah, I got mail. And any comments on the range of on the 10 or 15-minute candles on the VIX? I've never seen this before. There's a bunch of bad ticks out here today, and I don't have the ticks up on the VIX, but I would not be surprised if you see a whole bunch of them. I was seeing a bunch of stocks this morning where you were having ticks come back in from 30 minutes earlier. At the same time, so I was seeing 20, 50 cent moves in a stock I was following, and I just went to BATS Trading and looked at their ECN and saw that it wasn't in their feed, so I had a good idea what the stock was trading at. I didn't spend a lot of time, but don't be surprised to see a lot of bad ticks out here today. I'm not exactly sure. I always wonder whether or not someone was paid to pull the cables out in the olden days, because the market would go fast and the ticks would be 15 minutes behind. It's not that hard to build computers that are fast enough for the market. But what can you say? I just suspect a lot of people probably throw those things in to goof up the charts for a few days. And sometimes you just got to go clean them up yourself. And if you're not watching, you really don't understand what's going on. So there is an advantage to being around, just a little tougher out there. I digress. Riverbend, when we look at that real quick, let's see if we've got anything left. Announced it will be acquired by Thoma Bravo for $21 per share in cash. So we can kiss this one goodbye. Kind of interesting that anybody be willing to be acquired out here, but maybe they think that the market's over. ISIS is another mover out here. Unfavorable mention on Friday's Mad Money. So there are a few stocks out here getting killed on Kramer, but not a bad-looking chart out here. Had high volume back at the highs on the 11th. So chart-wise, probably pretty good. I've never trusted Mr. Kramer and always wondered if he doesn't do a lot of favors for his friends. I'll never be able to prove it. But my guess is he was always the consummate inside guy with insider trading information, left the market when he did and could no longer use that insider trading, and at least if you believe what his employees wrote about him. But I'm looking at that high volume high, so you got a chance to go back. The question is just what he did. Anyway, hang on for the Tom O'Brien Show. Probably going to be looking forward to what he has to say about the move in gold out here. Off $24. Not good at all for gold bulls. Anyway, 2 hours of the Tom O'Brien Show. We'll see you tomorrow. Same bat channel, same bat time. So when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.